Neeraj, Deewan, the director at Quantum Securities, to talk a bit more on the markets, the selling pressure that we are witnessing in the broader market. Some of it may as well be fundamentals. Neeraj, good morning. Thanks so much for joining us on ET Now. The small cap index has been selling off quite a bit for the last couple of months. We have seen significant selling pressure coming in. What is it that you would attribute this selling pressure to? Would it be the significant rally that we witnessed in 2016 and 2017, or would it be the fact that perhaps the outlook going forward looks bleak with all the headwinds that we have in front of us in terms of elections, of course, mainly? Would you attribute it to that?
Yeah, good morning. I think it's a multiple of factors. You can't really attribute this to one factor. Of course, one factor which is most significant, which we witnessed in February, March, was that there was a lot of froth in the mid cap and small cap which was building up, and people, investors were buying anything and everything which anyone was suggesting. So there was a lot of froth which got built up, and a lot of these stocks became very expensive and they ran much ahead of valuations. And it is the quality of stock, even good quality stocks or bad quality stock, all the stocks were running at that time. Bad quality stocks were also running a lot, and there were no fundamentals to back them. Still, there was a lot of buying activity in those stocks. So that was one of the major reasons which led to this froth built up. And when you got the capital gain news coming in the budget, and after that, now we saw crude going up. There's some talk about political uncertainty happening in the market. So all these negative factors have really aggravated that fall which started in March. Though in between in April we did stabilize a bit, but then again with the crude going up, the talk of macro picture getting bleak, Indian macros, Indian fundamentals. So all that has led to this kind of fall in the mid cap and small cap. And now the thing is reversed now, because everyone is talking about running towards safety, running towards large cap, and avoiding mid cap. So investors are not avoiding mid cap; they're in fact dumping mid caps. They're selling all kind of stocks, whether it's good quality. They're not differentiating between good quality and bad quality, mid cap, small cap, and selling is happening across that we can see.
Neeraj, but the fact of the matter is that a large part of the fall in the broader markets has already taken place. How much more to go? Do you think there is another 10 to 15% perhaps in store, or do you think we could very well be at the fag end of this sell-off? I think,
if we think individually stock price also, I don't think there's too much of a downside left in good quality mid-cap stock. Though, when the fall is happening, 10 to 15% downside after you've fallen so much is also possible. So I would say that when you think 10 to 15% fall, which should be, according to me, the maximum fall, because a lot of the mid caps are already fallen a lot. So what we saw today also, I saw advanced decline. I saw the fall was happening, and the Nifty or the Sensex fell because of stocks like HDFC, TCS, Asian Paints, Hindustan Lever. These were the stocks which led the fall, from the top today. So maybe you may get some correction in the index, but I think the large part of the correction, the mid caps and small caps, at least the good quality ones would have already got over. So people may still be, realizing that they have some of the junk stocks in the portfolio, which they were waiting for them to rebound, which they may still keep selling. But I think the good quality mid cap and small cap stocks there, the most of the selling may be over.
So most of the selling may be over in the broader markets. Neeraj, you've mentioned about how the focus will return to macros, and that's something that will drive markets. But the macro picture, of course, we did have the Q4 GDP data, which did look a bit encouraging. But otherwise, the macro picture does not look very encouraging, because, you have the pressure for the government to cut the taxes on fuel. So that will in turn lead to some pressure on the fisc. You have the weakening INR, which of course has rebounded. But nevertheless, the pressure continues over there. Crude prices as well globally have been rising. So how do you see the macro picture from here on, and what direction would the markets take based on that?
Yeah, see, you're right. There are factors like crude, pressure on the rupee, which are mostly dependent on global factors, so which we can't really take a call right now, because what we're seeing is definitely crude has come up. So you see some correction now. Whether that correction will continue or crude keeps on going up towards the later part of the year also, that is something which we can only take a guess on. But one thing is good that you saw the US payroll number, you've seen our GDP number. Growth is definitely there. Growth is definitely coming. Besides GDP, we saw good sales growth in automobile, commercial vehicles, which is continuing. So, which is giving some sort of an indication that growth is there and it is improving. So, it may be improving slowly. So, somewhere down the line there has to be a balance where you may get some factors like inflation going up. You may have some interest rate hike also. Like you may have an interest rate hike as soon as this week, domestic market is concerned, and the next week as far as US markets are concerned. So, but if that is coming and the growth is also there, that small increase will get absorbed in the market. That's what my understanding is. And you, after the sell-off, after the correction, you will get opportunities. And if inflation is going up further, even down the line, and if people start talking about political uncertainty, so there will be some volatility in the market which may even give you better opportunities. But I feel that as far as domestic growth is concerned, the number that we've seen, I think, and the kind of NPA resolution that we've seen, and even in the large part of the market, which is the PSU banks or the corporate facing banks, large part of the negatives are already priced in and they're already visible. So incrementally, I don't see any further deterioration there. In fact, going from Q1 of this year, you may start seeing some improvement happening as far as the NPAs are concerned, because provision that they had taken, the major part was taken because of February 12th circular in the last quarter of last year, may now going ahead decrease. The pressure on provisioning may start decreasing on those stocks also. So incrementally, I feel that negatives are more or less priced in, and you may get some volatility because of global factors or inflation going up, which you can't price in right now. But I think those will only be opportunities.
I'm looking at your top bets at Quantum, Neeraj, and there's DCM Shriram as well, which features in that list. What's the rationale behind liking this one?
See, I like that stock. There's been a massive correction in the stock, and the massive correction was because of two factors. One, they took huge inventory losses because of sugar prices coming down in the last quarter, and there was some write-off that they took on the bioseed business. So that write-off was something which they've already taken and which may not get repeated. And I think they've taken a major hit as far as fall in the sugar prices are concerned. But see, major profit for them now over the last few years have started building up because the chlorovinyl division, which earlier used to be 30% of their business and which has now become 37-38% as of last quarter, and going ahead which will go up to 40-42% of their business. And that is where they're doing the capex also, and they're doing a planned capex of about 1100 crores, because of which there will be more cogeneration capacity coming in. Distillery capacity is also coming last quarter. So all that capex which is coming in 2019-20 will keep on showing the growth on the top line, and profitability will also improve based on chlorovinyl. So sugar is one part where they've taken a hit, but going ahead, at least in this season, 60% of the sales which will happen has already been accounted for and marked to market. So any fall there, from the levels which we've seen earlier may be a negative, but that is something which we've already seen some bounce back there. And because of the fall that we saw because of these two negative factors, the stock has already corrected to a level of 260, 270, and it's available at 4.2 times EV/EBITDA and 6 times EPS. So I think that is a very decent valuation to invest in, and our target comes to close to 400, 420 based on 6 times EV/EBITDA.
Okay, so that's DCM Shriram, quite an optimistic target of more than 400 rupees. The stock, of course, as you can see on your screens, has corrected in the last 6 months. But there's another very interesting stock that you do have, and that's ICICI Bank. Yes, you did mention about how these banks may have already, the worst in terms of provisioning is already behind them because of the Feb 12th circular. But ICICI Bank has the other overbearing factor in relation to corporate governance issues. Many are, of course, not entirely trustworthy when it comes to the bank's board of directors. We had the whistleblower as well who came out, post which the board did direct that there may be an investigation undertaken. Wouldn't that be an overbearing worry for ICICI Bank?
See, if that was not the overbearing factor, then the stock would have already reacted on the positive. Even the last month when they declared everything, and after the results, everything is clear. They seems to have, cleaned the restructured asset, and everything has been booked as NPA. So it would have already reacted. But just because that overbearing factor is there, and there's something which everyone is pricing in, the worst will come because of the inquiry. There will be a lot of corporate governance issues. But then, a bank like ICICI Bank is not just a one-person driven bank, it's an institution. So, if something happens which we don't know what will come up from that inquiry also, is something which is also getting priced into the stock movement that we see now. And that is why you see a huge difference between the other private sector banks valuation and ICICI Bank valuation. But on pure operating fundamentals, if you see growth coming back, and when you see that most of the NPMS has been cleaned and NPA resolution has already started, with Bhushan being the first case, all that incrementally will only improve the fundamentals of the bank. So I think based on pure fundamentals over the next 1 to 2 years, I'm positive on the valuation front as far as the bank is concerned.
Okay, well, ICICI Bank it is. Neeraj, on that note, we'd like to thank you so much.